Hey, morning. My Lord, it's early. And look at the three of us on the screen. Mirko, welcome. Anthony, welcome. Nice to see you both, gentlemen. How are we?
Very good, Luke. Good to see you in the office nice and early.
I've got my first coffee in hand for the day, and I figured it's definitely not going to be the last. That's for sure.
No, absolutely, absolutely. Well, look. The fact that we're in the office at 7:30 on a Friday morning implies that either we're busy or, or actually, I'm not sure what that actually implies, but I think we are busy. Is that right? Is that a fair summation?
You're assuming that we went home last night, hey?
Fair enough too, mate. Fair enough too. Mirko, it's been a lot of fun on markets. Anthony, it's been a lot of fun at the ATO. So I guess before we go into markets, maybe we'll go straight to you, Anthony. I think you were saying that there's been a lot of activity at the ATO. What's going on at the ATO, and what do you want to let our clients know about?
Well, I think, Luke, first thing you got to realise is that there's states within the country that are broke, and I think the ATO is probably going to be propping up Victoria for a long time. So they are chasing money like I have not seen in 20 years, 25 years. So
Is that right?
A lot of DPNs, director penalty notices, are being issued for those with unpaid debts. So GST and POIG can now be passed through to the directors for businesses where it's unpaid. There's been a lot of communications over the last couple of weeks in regards to the service standards of the ATO. They outsource a lot of to contractors effectively their phone service. So there's been a lot of publicity around that and effectively the poor standards that tax agents particularly are getting. So I think it's going to be a bit of a watch this space. But the other thing is just this week we saw two clients actually had what they call debts that were non-pursuit some time back, re-raised. So one client was 2006 for $87, re-raised 19 years later, and the other was $330 or $360 penalty, which is about to be re-raised, put back on the account, which is I think 8 or 9 years ago. Now that person, the second one in particular, has lodged tax returns every year. I haven't seen this before. So non-pursuit, where they effectively don't chase it anymore, mainly because they can't find the person. But when you're lodging tax returns every year, this is back on. So I think this is just ramping up. There's going to be a lot of activity, I think, around audit and effectively trying to find money out of the common taxpayer. Late lodgement penalties is another area where it's a no-go zone now and trying to seek remission. So ATO is getting very, very active.
Oh, wow, that's that. And Anthony, have we seen anything on the? So when you say director penalty notices, that's essentially if you've got a company. But if you're a sole proprietor or a partnership from that point of view, at the moment you're still out of the gun. But I imagine that's going to change very quickly.
I don't think anyone's safe, Luke. If you've got effectively debts owing to the ATO, they're going to be chasing you in some form or another. Like only a month or so ago, we saw clients that had BAS statements overdue by 2 or 3 days in terms of the payment. They're already being chased. So I think it's just a no-go zone now in terms of late lodgements and monies owed to them. It's effectively probably just outsourced to contractors, get on the phone or debt collectors, and effectively they're just chasing it. And there's no ability to get out of it.
And just from a when the debt collectors are calling, because this all has the hallmarks of a robo debt scenario. If you think about what happened with the Centrelink piece when that all went pear-shaped. Now I'm not saying the ATO is accusing people of having a debt that doesn't exist, but the badgering and all that kind of stuff, particularly at a time of cost of living when things are tight, and now you've got the ATO pressure on the sidelines, badgering in the back of your ear. Does the ATO need to be careful here? Is there a duty of care to?
I think you're treading a fine line because effectively you're talking about generally GST and POIG, which effectively it's the tax on the employee's money, and GST is the collection you're the collection mechanism for the ATO. So it's you can probably draw comparisons to robo debt, but I think it's quite different.
Yeah. Okay.
Well, it's an interesting point you raised, because yesterday the Victorian state government, God bless them, have decided they're going to spend $8 million on debt collectors to collect their debts. And so apparently that 31% of debt owed to various agencies such as the State Revenue Office and whatnot are now more than 12 months overdue. So there's some serious money being owed, and people, like you said, Luke, are struggling to find that money.
Yeah, the thing that scares me with the Victorian government, you said $8 million. Okay, we don't have the $8 million to spend in the first place. So,
yeah, that same article that explained that our net debt grows by $2 million an hour in Victoria at the moment.
God bless the wonderful state of Victoria. What a wonderful place. What a wonderful place. Okay, that was depressing. Anthony, thank you for upsetting me already. It's Friday morning and already I'm upset about the ATO. But mate, have you got better news about the markets, Mirko? Is there anything happening that's good?
Quick disclaimer: we love the ATO guys. They're great. So if they're scraping socials for the word ATO, yeah, we love you guys. You're the best. Yeah, good on you. All right, markets. Look, it's been a very interesting week in Australia on Wall Street, and some big numbers being thrown around in terms of daily movements. So, like, for example, the US last night, the S&P 500 is off 1.77%, but on Monday it was up 1.54%. So it's actually just hanging in the green after 4 days of trading at 0.04 in the US. NASDAQ is off about 0.79, so they had a minus 2.5% last night. And we're starting to see this little bit of a theme of rotation out of the tech stocks into the more established, more seen as defensive type stocks happening in the US. So those tech stocks are copping a little bit of a battering, but not to worry, because they've done extraordinarily well over the last few years anyway. So it's not surprising, once we've seen these lofty stretched valuations, that this sort of thing can actually occur. Back home, a similar scenario. We're just hanging in there with Friday still to trade today, and we're 0.04 up in the green. And a bit going on with economic news in Australia, and a lot of this has got to do with perceived potential for rate cuts, etc. We had the jobs report come in yesterday, and the unemployment rate had actually dropped down to 4.3% in October from what was 4.5% in the previous month. And that just shows how strong employment actually is at the moment in Australia. Having said that, I do believe that really depends on what sector you're actually working in. But nonetheless, the overall number showed that employment was very strong, which then all of a sudden means that the chances of a rate cut in an economy that is perceived as doing really well is probably not going to happen anytime soon. In fact, some pundits are saying, who's to say there's not going to be a rate hike? I don't think it'll go that far, but I do think that there'll be a bit of sitting on hands from the Reserve Bank when it comes to pulling that lever anytime soon. We saw as an indirect result, the Australian dollar jumped up above 65 cents last night against the US as well.
That's not bad. Okay, I guess from your point of view, when we talk about rate cuts and we talk about the potential for either a cut or a hike, from that point of view, my read on this would imply that we're going to be probably flat, probably for at least till the first quarter of next year, maybe into the second quarter. Would that be a fair summation? And I guess, what does that do from a market perspective? And what does that do from a broader economic perspective? Like, you're talking to clients, you're talking to businesses out there from that point of view. Are people screaming for rate cuts, or is it business as usual?
I looked at the punter on the street is always screaming for rate cuts, but I mean, when you look at the long term, rates and the like, we're probably whereabouts we need to be in truth as far as rates are concerned. I do concur that rate cuts are going to be pushed into 2026, and and we may well get through the first quarter without any changes whatsoever. So. I think from a business perspective point of view, rate cuts are always positive in the sense that willingness to borrow money is cheaper, things keep ticking along. But you sort of got a bit of a oxymoron going here. That you're screaming for rate cuts, yet your unemployment figures are so low, which is saying that the economy is super strong. So it's a very fine balancing act that that central bankers have to deal with.
Mm. The other thing there too is thinking about what Anthony said earlier before about the ATO being hot to trot on PAYG, GST debts and all that kind of stuff. So if companies aren't paying this, they're living on the credit card by definition because they're spending monies that they don't have. From that point of view, interest rates, you can see how this thing is finally in tune, and it's just all it requires is one cylinder to go out of whack, and we could have a bit of a crisis on our hands from that point of view, which I guess brings me to my next question. CBA has come off probably about 10% in the week, Mick. So if you remember, there was only a while ago CBA hit the lofty heights of 194, 195, and this week dipped under $160. Not that we're cheering that on. We want it to be well over 195 and continue on that way, but because we're all investors in it one way or the other. But I guess from that point of view, is this just a pause? Is this taking a breath? Is it the squeezing of margins? What are you thinking, mate? What's the view?
Yeah, look, I think that there was always, and I mean for us that follow this pretty closely, there was always a very much a question mark over how stretched the CBA valuation actually was. When you're rolling around as one of the most one of the strongest, most valuable banks going around in the world, and here you are, shutting branches in Australia. Questions have to be asked. So I'm not surprised that we've seen what over in 2 days, I think it was off 9%. The CBA was. I'm not surprised that that's occurred, but when you're trading at 30 times PE. That's not a surprise for a bank either that could actually happen, and for those that are in the know, and for a lot of the funds that we invest in, it's been very clear that there's been an underweight position, and some of those guys got hurt during that time. We were talking about a particular fund manager that chases dividends the other day in investment committee, and we sort of said, gee, they've underperformed from a growth point of view, still delivered the income that which is really the mandate. And then you drill a little bit deeper and you find that they were underweight the CBA, and as a result, sort of they missed out on that. But yeah, they're probably sitting there going, well, about time. They're reviewing the week's events and going, okay, finally that call's actually paying off for us. So not surprising that CBA's come off. I know mum and dad investors that basically doubled the valuation of their CBA shares over the last couple of years will be none too pleased. But those same people, we know they're not selling those CBA shares because they love them. So it's all good. You'll absolutely still get your dividend.
No, I couldn't agree with you more. And Anthony, I imagine, like you said as well firsthand, we have a lot of self-managed super funds, our clients, and they do love the banking stocks from that point of view. CBA plays a pretty big role in those portfolios, doesn't it?
Yeah, it certainly does. And I think Mick's right in that most mum and dad investors have probably held CBA from in the 1995. Yeah, 1995. And I would have many tax clients that have never sold a CBA share. So it's a case of they look for the dividend, and they probably don't look at the paper to see what the share price is. But and you can go. I just had a look at the 5-year trend for CBA, and it has had significant drops of sort of up to 10% on multiple occasions. So it drops back, but then effectively just rides a wave and keeps going forward. So it's had corrections through its journey, particularly over the last 2 or 3 years. So it's just it's had significant rapid growth in the last 2 or 3. But,
Yeah, no, it has, and look, it is from an investor's point of view, and we know from a mum and dad's point of view, it is Australia's favourite bank in terms of from an investment perspective. They might bank at NAB, they might bank at an ANZ, but when they're shareholders, in the CBA. Funnily enough, so it's one of those things. Now, I want to move away from this because we're 1 year into the Donald Trump administration. And it feels like we've been around the moon 1,000 times, and it feels pretty exhausting after 12 months. So, and we've got 3 more years of this. So this is going to be entertaining. But look, there's 2 bits to the Trump discussion today. One of the things I'd like to do is I want to talk about that tariff dividend or that thought bubble that he had on Truth Social the other night, where he said, well, what we're going to do is we're going to give every American $2,000 to $3,000, not the richest Americans, mind you, but more the rank and file. We're going to give them $2,000 to $3,000 as proof of the pudding that the tariff policy is killing it, and that we're the greatest economy in the world. So that was the theory. And then the second part of the conversation, what I'd like to do is probably just hone in on a report card for the Trump administration, where we focus on things like affordability, the economy, and talk about tariffs again, I guess, from that point of view. So I guess getting back to that first point about the tariff dividend. So just to for the benefit of the context, Trump's been getting a lot of pressure. Obviously, people are complaining things are more expensive, things haven't come down, and so on. There's a disconnect between what the people are feeling and what Trump is seeing, or what Trump feels he's seeing. However, when pressure starts to build on Donald Trump, he then comes up with thought bubbles, and one of those thought bubbles was, we're going to give everybody $2,000 to $3,000. Interestingly enough, which is kind of cool, if you give everybody back $2,000 to $3,000, that's going to cost the budget $3.3 trillion. Yet the tariffs are only going to raise $2 trillion, which is going to exacerbate what is already a bad situation. Is Trump being serious, or is he just can't do maths? What am I missing here?
It was actually very funny, because I think it took about 2 or 3 hours, and Treasury Secretary Scott Bessent, I think he choked on his Weet-Bix that morning when he heard this, because he obviously didn't run this past him, and he was pretty quick to point out that a tariff dividend may well come in many different forms. It may come via some tax savings or whatnot, but the thought of dishing out $2,000 checks to everyone except rich people, that was thrown in there as well. I'm not sure that it's going to happen, because it actually mathematically makes 0 sense. And you're right, the money that was generated by the tariffs pales into insignificance compared to handing out a couple of $1,000 to everyone.
Well, 333 million of them, that's for sure. Anthony, is this? And the fact that Trump runs his agenda on a thought bubble, and I imagine this is late at night. He's doing it in full caps on his Truth Social media bandwidth, sending out these messages, and this is how he's running government policy. Surely to God, this is not how you should run a government.
Look, he's entertaining, and my view is that you can only have him in small doses, otherwise you'd be going silly. Yeah. I think one of the people, reporters, asked him how he was going to fund it. He says, "Don't worry, I always come up with the money. I always find it." Now, is it how you should be running government? I saw something else during the week. There was a report in regards to the IQ of the 30 or 40 presidents of the United States, and he had the highest IQ of all of them. Now, I suspect that how that's been assessed has changed over time, because that cannot be possible.
Fair point.
What about self-assessment? It could be the case.
I didn't go into the details of where the report came from. You could be right, but that's clearly fake news.
It could be on the back of that cognitive test where he was able to identify the rabbit and the elephant.
But
who knows?
Yeah, look, he's a mover and shaker. He gets things done, but at the end of the day, this is, I think, fiscal fantasy. I think, as you described it, Luke, is it just can't happen. It just makes no sense, and no wonder all the people that are sitting behind him, supporting him, are going, please keep your mouth shut at times.
Yeah. Look, I think the thing that staggers me is that anyone who actually understands economics understands that tariffs push up inflation. Anyone who understands economics understands that the consumer ends up paying for it. So the reality is, in terms of whatever he's doing from that point of view, and don't get me wrong, the revenue that he raises, if that revenue is then moved to paying back debt, yes, you can retire debt. But if you then go and use the monies that you're raising to then go and pay a dividend to people, which is going to be in excess of what you raise, that debt's just going to get worse and worse. Now, the math isn't too difficult. That's where you kind of sit back and go, for a guy who's a genius, well, self-proclaimed, let's acknowledge that. But for a guy who's a self-proclaimed genius, you'd kind of go, well, hang on a sec, you'd probably want to be monitoring that yourself, I guess. All right, so that brings us to a report card. Now, Trump was elected for a range of reasons, but one of the primary reasons was on affordability. Cost of living was a big issue, and Americans felt like that Biden had lost control, particularly around affordable things like groceries, petrol, and the like. 12 months in, what we've noticed is that prices have not necessarily come down. If anything, prices have come up or remained static from that point of view. And Americans are reporting that life is actually more difficult under Trump from that point of view. And we're starting to see that in approval ratings, with those approval ratings down 10% for Trump at this moment in time, which one thing we know, Trump suffers from vanity. So when he's not liked, he's not happy, as we know. If we were giving him a grading from A, B, C, D, E, and E being a failure or F being a failure, what sort of a grading are we giving him? Are we giving him are we giving him an A? Are we giving him a B, a C, a D? What are you thinking at the moment?
You can go first, Mick.
I thought you were going to do that. I think that the next headline, the next headline you see on Truth Social, Donald Trump's, will be Luke, Anthony, Mirko. You guys are fake news. You know that's coming. I guarantee it. Yeah, look, I think, I mean, I'm a numbers sort of guy, and when what was promised, and one of the key sort of tenets of his election campaign was driving down costs and everything, but that's not really what has played out. I mean, when you look at what the headline inflation rate was a year ago, core inflation, it's basically the same. I think headline was 2.9%. It's still 2.9, and core inflation was 3.2. I think it may be 3.1. So, and what we've seen is actually was on a downward trend coming down in 24. It's actually on an upward trend now, and we're still sort of waiting to see how these tariffs play out. So I think that the American consumer, the American voter, would be sitting there saying, I don't know that I received what was actually being promised to me at the time. So as far as a scorecard is concerned, I'm going to give you a pass only because you've got the ability to tell us how wonderful your scorecard should be, and that anyone that disagrees is fake news. But that's my opinion. I still can't believe, even if you take the numbers away, I still cannot believe what is going on in the world when we look at that. I mean, there's still a truckload of debt over there. What are we at? 38 US trillion now. That's higher than what it was. We saw the Doge debacle with his mate Elon Musk when they fell out of love, and it's just been shambolic, to say the least, as far as I'm concerned.
Yeah, I think that's right. I think I reflect back on the time when he was in last time, and effectively how positive that was generally for the economy, for markets, etc. I think if he was a first-time president, you'd be giving him a massive fail. I think he's probably hanging on with a pass only because they know potentially what can happen and what he's capable of. But I think it's a bit underwhelming at the moment.
Yeah, no, that's a fair point. And I think the thing for mine, I think, is when we look at inflation is a combination of goods, yeah? So of the goods, for example, and there's no question that certain goods are coming down, AI, technology and all that kind of stuff are pushing things down, but they're the things that are coming down that you don't buy on a regular basis. So you're not buying the computers, you're not buying the TVs, you're not buying the stereos, you're not buying the kettles, you're not doing all those things on a regular basis. You're buying them intermittently. But the stuff that the Americans people are buying on a day-to-day basis, beef, petrol, groceries. Likewise, here in Australia, we've got the exact same problem. Those are going up. And that's where they're feeling it. The other thing there too is on healthcare, their insurance premiums are going through the roof as well. So they've got the same problems that we've got here in Australia. So that's what the American consumer is talking about. And there's a disconnect between what Trump's seeing. So I think in some of the data that he sees, he's going, well, yeah, it's coming down. So you give them a pass on those things. But on the things that they're buying every day, that's where the disconnect is. So I think the challenge for somebody like Trump at the moment is, because he's so bombastic from that point of view, is that, he doesn't like when people don't like him. He accepts that there is half the population who don't like him because they're on the left. But when his own base is starting to say, hang on a sec, we're having a problem, that's when the panic sets in and you start to get these crazy policies of $2,000 dividends and the like. Thinking about the economy, and I think, from that point of view, Trump's biggest statement, or one of his claim to fame, is we've built the greatest ever economy of all time. And he's very much the architect of that. And he's very quick at telling everybody around the world, very quick at telling everybody in the media and all that kind of stuff. Is there any truth to that? And are we giving him a pass mark on that? Is there a disconnect again in Trump's thinking?
Look, I think that when it comes down to what is the actual reality, I can't go past that. What you've managed to do is increase the debt in the country. The GDP is not going in the direction that it needs to be going. In fact, you've shaved the GDP percentage points off as a result of this 43-day shutdown. So yeah, I would say that looking at the expectations that I think the International Monetary Fund had the US economy growing at 2.1%. Last year it was growing at 2.4. So he will continue to tell you that the American economy is super strong, that we're smashing it, but I don't know that that's actually the facts.
That's fair.
Yeah, I think that's right. It's the numbers. The numbers are what they are. He can tell you. He can spin the story as whatever he likes. But as you've said, Luke, the disconnect between the American people and what he's doing is clearly there. So, without being on the ground there and seeing what's happening, but I suspect there's a lot of pain across the country.
Yeah, I think this is what is typical with the United States more often than not. There is a disconnect between Wall Street and Main Street. So, Wall Street at the moment, and if Trump is looking at that and that's his barometer, which in fairness, Mirko, you and I would probably attest to this. If you think about his first campaign or his first election, that's all he spoke about. He pinned his success on the value of the share market. So if we look at the value of the share market, there is no question the share market has gone up in value, not down in value. So is he building a great economy? Absolutely. Is he building a great market from that point of view and providing the foundations for companies like NVIDIA and for those sort of companies to flourish without guardrails and free from any sort of restrictions? Yes, that's what he's done. So in that regard, you could argue and say, tick, that's an A. As to whether or not that's good for society, that's a separate argument. However, I think when we go back to Main Street and we start talking about day-to-day and people paying all this sort of stuff and their costs and so on, there is a real disconnect. So, that's where you'd bring that pass mark or you'd bring that mark down from an A quickly down to a C or a D very quickly, in the sense of saying, there's two economies, there's two speeds at the moment, which in fairness, one could argue is saying the same thing about Australia, I guess, from that end. Thinking about tariffs and just wanting to, and not talking about the dividend themselves, but actually thinking about tariffs and the way that policy has been executed and the amount of confusion that policy has potentially caused domestically and overseas, and what it's done from an allied partnership perspective. Do you think Trump's efforts to date have been successful, or do you think it's been poorly executed, or is this very much a watch this space?
Look, I think the way that the tariffs have been handled, the way they've been positioned, the numbers that have been thrown about, the board that was held up back in April 7, April 8, I think it was, it's just been farcical, to be perfectly honest. And anyone that has ever sat through at least half a class of economics at university would just be scratching their heads going, are you kidding me? You're arguably running one of the most powerful, wealthy countries in the world, and you are making decisions like this. And it's actually tantamount to grabbing one of those whiteboards and, I don't know, for US purposes, coaching an NBA team and shuffling the magnets around, on the fly during a timeout where you've got, 20, 30 seconds up your sleeve to make changes. That's what it actually feels like at the moment. And, and we've lived through, April, where all of a sudden on a whim, actually, we're going to pause that for 90 days. We'll revisit that. We'll kick this can down the road. We'll backflip on this. It is near impossible to actually work out what is going on. The interesting thing is that what's happened is that there was it's actually thrown economies out. So if you look at even Australia's trade figures, we've had all this stuff going out of the country, like gold, etc., off the back of not sure how these tariffs are going to play out. Let's start loading up. So there's been a whole heap of stockpiling of goods as well. So we don't know how that plays out in 2026 either.
That's a fair point. That's a fair point. What's your thoughts, Anne?
Yeah, look, I think the whole tariff thing's been, as Mick said, farcical in terms of the way in which he proposed them, pulled them back, changed them. You just look. He is the front man, but you got to wonder in terms of the people that are sitting underneath him that you would hope the brains behind the country's operations. What are they doing? Like, there's got to be a better way to handle this. The way that it's presented, put forward, and it just seems like it's America versus the rest of the world. What it seems like it's coming to.
That's a great observation, Anthony, because I think you've hit the nail on the head there. And look, in fairness to everybody, Trump was always a tariff guy. So this is not unique to now. Trump's always been of the view that tariffs play a role, and his view is that because of the way America's standing was out there from that point of view, trying to do the right thing, being the global conciliator and the umpire from that point of view, America copped a lot of hits because other nations were imposing tariffs. America wasn't. So it meant that, America was always at a disadvantage. And what he was trying to do was change the dial on that. I think the way he's gone about doing it and, running policy on his social media platform, Truth Social, is not the way to run policy, first and foremost. Threatening other countries doesn't make sense either. Interestingly enough, those threats to other countries, it's been fun to watch countries come and appease Trump. So they come in, they appease him, they say, yeah, whatever. And I would argue and say Albo did that to a certain degree. Go in, appease him, make sure you don't cause any ruckuses from that point of view, walk away, and then go and create deals with other people as well. And I think the challenge in all this is the damage that Trump has caused from an economic alliance perspective moving forwards. So if you think about the alliance between Canada and America, you couldn't get two countries that were closer or closely more aligned than those two countries. And Trump has drawn a wedge there where Canada is now talking to the UK, Canada is now talking to Europe, Canada is now talking to China directly and creating all these deals. And they're saying to the US, yeah, no worries, we're happy to do whatever you want, you'll keep. But we're now building alliances with all these other nations, which essentially means that in 5 years' time or whatever, when America says, okay, we now need Canada back, Canada's established all these other relationships. They actually don't need the US anymore. So this is the challenge, I think, from that point of view, where sometimes you got to be careful what you wish for. And I think Trump, there's a lot of short-term populism in terms of what he's trying to do. And it sounds really good in theory, but the ramifications downwind, I think, are going to be huge for that economy.
I think one of the things that Trump wasn't expecting was going to be China's attitude towards this, and and this was very early on in the piece. When we were at 100, I think it was 145% or something, and that Chinese state official actually said, "We don't care," and that was actually, he did not expect that. He did not expect them to just turn around and go, you know what, we don't care. China's been here for 5,000 years, and we've survived. We'll be fine. We don't need you. And I don't I don't believe that he expected that sort of rhetoric to come back his way.
Yeah, I think he also didn't anticipate. Sorry, let me rephrase that. I think he knows the strength of China, but I didn't think he anticipated that they just would actually go out there and just show it with no fear whatsoever. So even with what they're doing in the South China Sea and all that kind of stuff, it's like that they're daring the Americans to go on, what are you going to do? And every time they get to that point, you see Trump, he always steps back from that point of view, which then brings the interesting question, which is, if you can't upset China, you might as well go and attack Venezuela. But we'll leave that for another discussion for some other day. But
That's
gentlemen,
the latest one.
Fascinating conversation. A lot of fun. What have we got planned this weekend? Anything exciting, Mirko? You're hanging around? What are you doing?
What am I doing this week? I haven't thought about that yet. Hopefully very quiet. Hopefully nice and quiet for me this weekend. A home weekend.
Nice. And what about yourself, Ant? You doing anything exciting?
Well, hopefully if we don't get rain, there might be some outdoor activity with a lawnmower.
Good boy, mate. Well, you can come to my place too, mate, because the garden at the moment, with the amount of rain we've had, Jesus, it's cracking out there. By the way, and remiss of us not to mention too, the US government did reopen this week, which is always nice that the greatest democracy in the world actually now has a functioning government after 44 days?
43 days. 43 days, and they're going to start paying people. They might even get some stats out of the equivalent of the Australian Bureau of Statistics, whatever their statistics department is called.
Wow. Just from a clarification point, I noticed you said they might even start paying people, but the politicians got paid throughout. Is that right?
Of course they did. Hello.
So I just needed to clarify that, because I'd hate to imagine that they went hungry, because looking at them, they were looking a bit disheveled and whatever. I was a bit concerned.
Famished, completely famished.
Gentlemen,